Okay, so we're about to get started. So if you want to participate in the questions that I'm going to be asking, go to this URL that will let you participate in our polls. You don't have to enter a name. You can if you want. You can make one up, whatever you like. All right, so let's get, and hopefully that will work. All right, welcome. I'm Jerry Detweiler. I'm Education Director for NAV, and we're going to be talking about the credit score you haven't heard of but should. Again, if you go to this URL, you can participate in the questions I'm about to ask. And just to see if that is working, let's see if it's working. It's not working. I want to ask you to describe FinCon so far in one word. Type it in and let's see if it shows up for us. FinCon in one word. It sometimes takes a second. We'll get it going. All right, exhausting. It's a good exhaustion, right? Like when you've run a marathon. Energizing, educational. All right, FinCon is going great. Awesome. Well, thank you for participating in that. Here's my contact information. Jerry Detweiler, Education Director at NAV. You're always welcome to reach out with me for questions, content, or just to help share and promote what you are working on. So we're going to talk about small business. How many of you have written about personal credit scores? And how many of you feel like I've written every story I can about personal credit scores and I need a new topic? All right, so how many of you work with small business owners in some capacity? You educate small business owners. How many of you are a small business owner? Okay, so businesses have their own credit scores. And I can tell you, I've been at NAV now for 3 years. I was previously at credit.com. Some of you know me from there. I've been writing about credit for 30 years. And so I've seen the gamut, and what I feel right now is that business credit scores are where personal credit scores were 20 years ago. So 20 years ago, I would do workshops, and I'd say, do you know what your FICO score is? People give me the deer in the headlights look. Well, now they do that about business credit scores. I want to educate and empower them so they can get better financing when they need it. We did a survey at NAV, and we found nationwide small business owners who understood their business credit were 41% more likely to get approved for a small business loan. We think that's a competitive advantage, and we want our customers to have that competitive advantage. So if you haven't heard of business credit, then the first question you probably have, and I can tell you this is what small business owners ask me, is, well, who uses this information? I haven't heard of it. Like, is it really for real? And yes, it is. These are billion-dollar companies that sell credit information. It's used on trade credit. That's where maybe you're a sign manufacturer. You need to get steel and plastic to make the signs, so your supplier lets you buy those on net 30 terms and pay for them later. It's used by insurance companies. So we have a NAV customer who owns an insurance agency. He could not get errors and omissions insurance because his business credit showed something negative that belonged to another business in another state. And until he cleared it out, he was having trouble getting insurance. There's some business loans that require good business credit scores. And then if you want to do business with the large companies like the Walmarts and Targets of the world, they will ask for a DUNS number, which is with Dun & Bradstreet. I'll share more in a minute. And they will check business credit. All right, so let's go to a poll real quick. Which commercial credit bureau employed 4 U.S. presidents? Anyone want to guess? Which commercial credit bureau employed 4 U.S. presidents? All right, so these former presidents were what were called reporters, and back in the day, they'd go around and gather information and supply it to the credit bureau. And we have a pretty wise audience here. D&B actually employed Abraham Lincoln, Grover Cleveland, William McKinley, and Ulysses S. Grant. They were all reporters. It was a very prestigious job in the day, and it was said to teach them about small business. So with consumer credit, we know the 3 main agencies are Equifax, Experian, and TransUnion. With business credit, they are Dun & Bradstreet, Equifax, and Experian. Now, with Equifax and Experian, these commercial bureaus are completely separate. They do not interact with the consumer credit bureaus, except that Experian does sell a product that can blend the business owner's personal credit score with the credit of the business and create a single credit score out of that. So there can be some overlap. If they do that, they have to have permissible purpose in order to access that data. Now, there's another layer of confusion in here, and that is there is this data warehouse called the Small Business Financial Exchange. It says it's not a credit bureau, but it collects credit information, and then it disseminates that. But what it does is all the major financial institutions, so your Wells Fargo, Bank of America, PNC, any major financial institution probably belongs to SBFE. They put all their commercial account information in there, and then in order to access that information, no one goes to SBFE, they go to their partners. So DNB, Equifax, Experian, and LexisNexis are all partners, and someone would buy a credit bureau through those a credit report through those agencies, not directly from the SBFE. But the data that's in there can have an impact on their credit. In addition, just like in consumer credit, we have about 30 different consumer reporting agencies that meet the qualifications of a national consumer reporting agency but aren't in the big three. Well, in business credit, we have a lot of that too. So we have PayNet, Info Group, LexisNexis, other small bureaus. So there are additional data sources that can come into play. Now, one thing I think is particularly interesting, have any of you been asked or have you done a story on will social media hurt my credit? Now, that's a story that I was asked to write a couple of times over the past few years. And in the business credit world, it can. Consumer credit is very regulated, so you don't see as much alternative data going into it. But with business credit, there are lenders who are very upfront about the fact that they will look at their customers' Yelp reviews or their TripAdvisor reviews or their Facebook business page, and that data can have an impact on their business credit. So there's another lender who says that we can tell more about our customers' creditworthiness from their shipping data. If we plug into their UPS account and see how many boxes they're shipping, where they're shipping, how often they're shipping, we can make credit decisions based on that. So there's a lot of innovation going on in the business credit world, and it can be quite different than what we're used to in consumer credit. So one question I often get is, how are business credit reports created? On the consumer side, we know they start when you get your first account, right? That first account is what triggers an inquiry to the credit bureau, and then that first account reporting starts your credit file. With business credit, it's a little bit different. So they can pick up that information from your state courthouse. So you incorporate your business, you file a DBA, a doing business as with your business, but you have to get on the radar of the business credit agencies in order to have a file. And it does often start at that state level. Now, that leaves out a big group of small business owners. Anyone can think of who that is? Sole proprietors who don't have a business structure, who aren't operating with a business license, aren't operating with a DBA. They have to be very proactive in order to create a business credit profile with the business credit agencies. So one way to get started is to go to DMB and request a free DUNS number. The DUNS number is like their equivalent of the Social Security number on the consumer side, but it's their identifier in their system. Experian uses something they call the business identification number, but you can't go directly to Experian to start that process. With Experian, it starts with a credit reference or with them picking up information from state filings in order to start creating that report. All right, so if you're on the Poll Everywhere app, I'm going to ask you to address another question. If you aren't, there's the URL there where you can participate in our poll. What's not likely to impact your business credit? And the answers here we have options are bankruptcy, inquiries, late payments, or UCC filings. So which of these are not likely to impact a business credit report? And we have some guesses waffling between bankruptcy and inquiries here. And the correct answer is inquiries. So they really, on business credit, they aren't interested in inquiries. And in fact, in some reports, it doesn't even show up, but it's not likely to impact the credit score. But let's go over what's in a business credit report and what might impact that business credit. So in your business credit report, you have the usual suspects. You have payment information if you have accounts. You have information about your business, the location, maybe the number of employees, anything that's publicly available that they're able to add to it. But there are some key differences with business credit. One is Have any of you ever seen your business credit report, by the way? Anybody? Okay. Well, you can do that for free at NAV, and we'll be happy to, we can even show you how to access a snapshot without a NAV account at our booth. But the first thing you'll notice is they do not list your creditors. So think about getting your credit report, and it says you have a mortgage, but it doesn't say who it's from. It says you have a credit card, but it doesn't name the issuers. This is standard industry practice of business credit. So you have to be a little bit of a detective to try to say, well, that looks like the right size of credit line to belong to this particular creditor. You have to do a little bit of detective work sometime to figure out who's reporting to your business credit. Another thing is they don't report credit limits. So business credit scores that do look at utilization, not all of them do, they will not see a credit limit, so they have to substitute the highest balance instead of the credit limit. And then payment history differs. I'll talk about payment history in just a moment, but it's grouped by the percentage of time that you're on time. So there's not that 24-month grid that you see on your personal credit where it shows the last 2 years each month whether you paid on time. Instead, it's grouped by percentage of time that it has been paid on time. And finally, business credit reports are not subject to any federal or state law. None. So anyone can check your business credit. As long as they're willing to pay for it, they can check it. And there are no laws regarding disputes or free disclosure or annual disclosure, anything like that. It just does not exist. So that's one reason we're around at NAV is to provide that information to small business owners for free. All right, so what then, out of business credit, what is a good business credit score? This is an open-ended question. Anyone want to take a guess on what a good business credit score might be? Okay, I'm looking for a number here. 5, okay. 80, all right, who said 80? Okay, we got an 80 back there, all right, 750. All right, 700. So when I give this presentation, I'm seeing a lot of 700s and 750, and that's very logical because that's what when I give this presentation, that's the score range that we're used to. But the score ranges for business credit are different than the score ranges for personal credit. So most of them run on a 0 to 100 scale. Not all of them, but most of them. And in that scale, 80 to 100 would be good. The FICO SPSS score, which is a special score that FICO developed just for small business, runs on a 0 to 300 scale. 300 is the lowest risk score, so it's the best. And there we find that most lenders are looking for a 160 or above. But I'll talk about the FICO SPSS score next. So FICO SPSS is a score that FICO developed for small business lending, and it's used by banks. They say it's used by about 7,000 lenders, but it's also used heavily in the SBA loan program. So if you have a customer who wants an SBA loan, which are great loans, predictable terms, great interest rates, they're probably going to be screened using this score. Now, what's unique about the SPSS score is it takes into account the owner's personal credit as well as the credit of the business. So those are combined to create a score. And they can even add in financial data. That's optional, like revenue data of the business to help with that score as well. So it can include both. And as I mentioned, with the SBA program, the minimum score that the SBA requires, if this score is used, is a 140. 140 out of 300. But most lenders are looking for a 160 above. And I will tell you that at NAV, we find that some customers can get a passing score, a FICO SPSS score, with just stellar personal credit and no business credit. But it's a lot easier for them to get a passing score if they have taken the time to build strong business credit and personal credit, and then they're usually in a better position. So with business credit scores, another thing we find at NAV is that there's often a big difference. So with consumer credit, chances are you're going to be in the same score range with all three bureaus, right? It might vary a little bit, but if your score is excellent with one, it's probably not going to be terrible with another. But we see swings like this in business credit. And what I'm showing here is someone who has an Experian IntelliScore that's a 15, not good, a DMB Paydex score that's 64, moderate, and then an excellent FICO SPSS score. And we see that because the data reporting isn't as consistent. So not all auto lenders, or not all credit cards, not all lenders are going to report to business credit like they do usually consistently to personal credit. So let me give you the 3-minute crash course on how to build business credit. You need to create a business entity. You don't have to. You can build business credit as a sole proprietor. So you can build business credit as a sole proprietor, but you have to get on the radar of the credit bureaus. So I recommend at least getting a business license and filing a DBA with your state, a doing business as, so you're on the radar and they know that you exist. But if you think about it, you will never truly separate your business and personal finances if you still are using your own personal finances. So as a sole proprietor, you and your business are really one entity. There's not really a separation there. We also recommend that business owners separate their business and personal finance, get a separate business bank account. Depending on the survey that you see, anywhere from 10 to 20% of small business owners are using personal banking to run their business. So they do not have a separate business bank account, and that makes it difficult because some lenders want to see financials. Request a DUNS number. You can get that for free. It's available directly from the Dun & Bradstreet website. It takes about 4 to 6 weeks, so you have to be patient. We also offer that as just a service within a free NAV account. Step 4, you need to have references that report. So just like personal credit, what do you do when you need to establish personal credit? You go out and get credit, right? You get an account, you get a secured card, you get a credit builder loan, you get something that's going to show up with the credit bureaus. You need to do that on the business credit site. So this is a short link, nav.com/vendors. It's a short link to a list of vendors that are super easy to get business credit with. You can buy your Keurig cups for your office coffee machine. You could buy your shipping boxes or your copy paper, or whatever it is. They'll give you net 30 terms, which means you pay in 30 days, and they'll report to the credit bureaus. The 3 that I reference here don't even check personal credit. So even if you have a client who doesn't have great personal credit, they can get started with vendor accounts. The other thing I suggest the business owner consider is getting a business credit card. And the reason I suggest that is because business credit cards often report. So this is another short link to an article I've written, nav.com/business-report, that lists all the major credit card issuers and how they report to business credit. I have not yet added, Discover just came out with their business credit card again last week. I haven't added it to this chart yet, but they do report to Experian, Equifax, and DNB. So they report to all 3, so they will be added to that chart as well. And then step 6 is to pay on time. Payment history is heavily weighted in business credit scores. DNB is all payment history. That's all it is. Experian has a very heavy weight on payment history. So it's even more crucial for the business owner that they pay on time. So the way they measure payments is using something called DBT. Anyone know what it stands for? We're looking for 3 words here, DBT. Anyone know what DBT stands for? I've heard debt before taxes. That's not it. Any other guesses? I feel like we've got a guest coming on here. All right, so shout it out and we'll add it. Do you know what it is? It looked like you were madly typing, so I thought maybe you knew what it was. Days beyond terms. So days beyond terms, and that is where they look at when it was due and how many days after that did you pay it. So if you got net 30 terms with your vendor and you paid on day 32, you are 2 DBT. If you had net 60 terms and you paid on day 62, you're still 2 DBT. It is based on the due date of that invoice, and that's what determines it. So what do you think is the national average for all small businesses across America? So if you're on the Poll Everywhere app, take a guess, number of days that you think that these companies are paying their bills beyond the due date. Anyone have a guess? 6, 45, 17. Okay, I think 30. So 17 is the closest, 11. According to Experian, 11 days beyond terms is the national average. We also want to make sure that business owners fix mistakes. The Wall Street Journal report found that businesses have a higher level of mistakes than consumer credit reports. And so we want to make sure these reports are accurate, and then monitor credit. You cannot freeze your business credit. There was a story recently in the NBC News about a lawyer who had to shut down his practice because he was a victim of business identity theft and personal identity theft at the same time. And it's so serious that he has to shut down his practice. So monitoring your business credit, even if you don't need to borrow, is a great way to help you understand. And in fact, there's a very well-known blogger here at the conference who told me a story 2 nights ago about how she got calls from collectors and her relatives got calls from collectors because they opened a business credit card in her name and she didn't know about it and went delinquent. They were calling her ex's wife's brother or something like that and reporting that she was late. Business credit, they can do whatever they want. So they got pretty aggressive. All right, last thing I'm going to share with you, and then the full deck will be available to you. So I have more information, but we're out of our time, so I don't want to take it any longer. But I want to encourage you as small business owners yourself to think like a lender. I don't know if any of you have ever done work and not gotten paid for it. I have. So I have been stiffed for more than $40,000 from a business partner where I did all the work and didn't get paid. And when I bring up this topic, I hear from all kinds of small business owners who say the same thing happened to me. So just like anyone can check your business credit, you can check business credit on them. And sometimes that will give you clues in terms of whether they are paying their bills late and maybe a risk that you need to charge a higher deposit, or you need to maybe think about getting all your money up front from them, or maybe even consider not doing business with them if they look like a really bad credit risk because it's going to affect your business reputation. All right, so let me just go to the resources slide again. Let me mention one more thing for you, and that is that because there is a lack of federal law that applies to business credit, there's no time limit on how long information can be reported. There's no time limit on investigating disputes. There's no requirement that they tell you if your business credit report was used in a transaction and you were declined or charged more as a result of that. So we feel at NAV it's very important for business owners to understand their credit so that they protect themselves and position themselves. So when they do need financing or do need to do that big deal or work with that retailer, they're in a better position to do so. So you can get free business credit data at nav.com. DMB does have a free product called Credit Signal. And then Experian, you can search and see if you're in their database. You do have to pay for a report, but you can do a business credit search to see whether you're in their database, and at least that's an indication of getting started. Again, I'm here at the booth. I'm more than happy to serve as a resource for you for stories, and we have an affiliate program. Happy to talk to you about that, but I'd be happy to answer questions and be a resource to you as you help your clients. Thank you.